In 2025, Canada stands at the brink of a financial transformation that's quietly but powerfully reshaping the economic landscape. While global markets wrestle with uncertainty, Canada is orchestrating a delicate pivot, one defined by falling inflation, decreasing interest rates, a housing market realignment, and a technology-led banking revolution. This isn't just economic news. It's a seismic shift in how Canadians will live, invest, and build wealth over the next decade. Investors, billionaires, and policymakers are all paying close attention, and so should you. In this video, we unpack exactly what's happening in Canada, why it matters, and how you can position yourself ahead of the curve. To begin with, let's talk about inflation. Throughout 2023 and early 2024, inflation plagued Canadians with higher grocery bills, surging rents, and stagnant wages. But as of Q2 2025, inflation has dropped significantly, resting below the 2% mark for the first time in over 3 years. The Bank of Canada, once hesitant, is now poised to cut interest rates more aggressively. This shift is giving Canadians room to breathe, reducing borrowing costs, reinvigorating mortgage approvals, and potentially igniting a modest resurgence in consumer spending. The big winners here: first-time homebuyers and small business owners who've been locked out of affordable capital for too long. Yet this rate drop doesn't come without complications. Canada's credit card debt has quietly surged to record levels. As consumers feel more confident, they're spending more, often on credit. This has prompted lenders and fintech firms to roll out new AI-driven credit monitoring tools designed to predict default risks in real time. This is no coincidence. With machine learning and behavioral finance models now mainstream in Canada's digital banking space, the nation is rapidly becoming a case study in how technology can mitigate economic risk while simultaneously enabling smarter consumer finance. The housing market, long the centerpiece of Canadian wealth building, is undergoing its own identity crisis. Gone are the days when investors could blindly flip properties for quick profits. Canada's major metros, particularly Toronto and Vancouver, are stabilizing, but in unexpected ways. While luxury condos are seeing price declines, single-family homes in emerging suburban areas are rising in value. What's fueling this? Remote work, hybrid business models, and younger buyers fleeing unaffordable urban cores. Hedge funds and institutional investors are quietly snatching up multifamily units and townhomes in Ontario's outer rings, signaling a long-term bet on the suburbanization of Canada. But let's zoom out and look at Canada's fintech ecosystem. In 2025, Canada is no longer just following the lead of Silicon Valley. It's setting trends of its own. Toronto and Montreal are now top 10 global fintech hubs, according to the latest KPMG rankings. Startups specializing in open banking, digital identity verification, and SaaS-based compliance platforms are attracting billions in venture capital. This isn't just good for the tech sector. It's revolutionizing how Canadians bank, invest, and insure their assets. AI chatbots, once a novelty, now handle over 40% of all Tier 1 customer banking queries in Canada's top 5 financial institutions. Speaking of insurance, 2025 marks the year Canadian insurance firms finally embrace real-time pricing. Enabled by IoT devices and real-world behavioral data, auto and home insurance are no longer bound by outdated static pricing models. Instead, premiums adjust dynamically based on how safely you drive or how well you secure your home. This has opened the door for new players, like Shopify-backed insurtech platforms, to capture market share from legacy giants. And it's giving consumers, particularly millennials and Gen Z, more power and transparency than ever before. Meanwhile, wealth management in Canada is experiencing a demographic shift. Baby boomers, who controlled the bulk of private wealth, are passing it on, slowly but steadily. This $1 trillion intergenerational wealth transfer is spurring demand for ultra-customized investment strategies, ESG-aligned portfolios, and even digital asset advisory. Canadian firms are now bundling crypto, green bonds, and real estate trusts into managed portfolios tailored to younger investors who demand both performance and purpose. In fact, ESG investments in Canada crossed $350 billion in AUM this year, up 27% from 2024. On the regulatory front, the Office of the Superintendent of Financial Institutions, OSFI, is evolving rapidly. In 2025, new guidelines around capital reserves for digital-first banks are leveling the playing field between incumbents and challengers. Canadian regulators, often conservative, are now acting with urgency to adapt to Web3, AI, and decentralized finance models. The introduction of a national fintech charter, similar to what we've seen in the UK, is expected by year-end. This will give legitimacy and clearer compliance pathways to startups previously operating in legal gray zones. Let's also not forget Canada's global trade positioning. With supply chains increasingly regionalized due to ongoing geopolitical tensions, Canada is emerging as a reliable manufacturing and logistics hub for U.S. firms seeking North American reshoring. The provinces of Alberta and British Columbia are leveraging clean energy incentives to attract tech-driven industrial facilities. This is creating jobs, strengthening the CAD, and offering Canadian investors new sectors to consider, like rare earth mining, sustainable transportation, and advanced robotics. But all of this change demands a shift in how Canadians think about money. Traditional savings accounts are no longer safe havens. Inflation, even if low, still eats into stagnant returns. Canadians are flocking to HISA ETFs, real estate income trusts, and even private debt platforms that offer 6 to 9% annualized returns with moderate risk. This appetite for alternative assets mirrors trends in Germany, the UK, and Australia, where retail investors are becoming more sophisticated, curious, and digitally connected. Perhaps the most underreported trend of all is Canada's quiet embrace of AI in personal finance. Startups like Wealthsimple and Coho now offer predictive analytics tools that nudge users toward better budgeting, tax planning, and even donation strategies. With new federal incentives supporting digital literacy and fintech adoption, financial literacy is no longer optional. It's embedded in the apps Canadians use daily. So what does all this mean for you? It means that Canada is no longer a slow-moving, overly cautious player in global finance. In 2025, it's agile, tech-savvy, and increasingly investor-friendly. Whether you're looking to buy your first home, hedge against inflation, build a fintech startup, or simply grow your wealth, now is the time to act. This is your financial wake-up call. The next 9,000 words of this video will take you deep into each trend, uncovering the strategies that top investors, billionaires, and everyday Canadians are using to navigate this transformation. So buckle up and let's dive into Canada's financial revolution in 2025.